Welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, I'm going to take a look at something called Bollinger Bands. So the first thing I'll do is I will click on the indicator. You just type in Bollinger Band. I have it saved as a favorite, and you can see what happens. It brings up this indicator that has 3 lines and some colored fill-in. Now, Bollinger Bands are just simply, if you remember the standard deviation, the bell curve in your math classes, that's all it is. So basically, this is your average. In this case, it's a 20 SMA. You can adjust it if you want, but I'm just going to use the common one. And 2 standard deviations, +2, -2, because remember, it's, what is it, something like 96% of all numbers fall within 2 standard deviations. So the idea is that if price deviates 2 standard deviations from the norm, it's overbought or it's oversold. There are a million ways to use Bollinger Band, but suffice to say, if you close outside, the idea is it's going to come back to the norm at the very least. So, we spike way low here. Eventually, we hit the moving average. We spike a little high up there. We hit the moving average. There is a debate whether or not you should wait for a candle to close outside of the moving averages or outside of the standard deviation, or if you just do it when a wick does. Another thing that I would bring your attention to is notice how it expands and contracts, and that is a direct sign of volatility. So, for example, in this area here, it's pretty tight. That means the markets aren't very volatile. It's what is known as a Bollinger Band squeeze. And what that means is you're probably going to get a pretty explosive move sooner or later. Again, look at this. Price isn't moving, then all of a sudden we explode to the downside. So when you see this, you have to think, okay, a move is coming. You wait for the bands to start to widen out, the price to go in a direction, and then you just follow. That's one way you could trade Bollinger Band. As I said previously, if it closes outside of the Bollinger Band, you expect it to go back towards the moving average. The problem, and it's actually shown quite well here, is that once you get this close here, you may say, okay, I'm going to buy it. But by the time it hits the moving average, you barely got any profit, or you may end up taking a small loss. So again, it's kind of one of those things, you just don't jump into it blindly. You want support and resistance. So check out this move here. This is a good sign of a nice trend because the moving average is showing it. You see that it's oversold, you buy it. You see it's overbought, you sell it. It comes back to normalcy. You get rid of it in theory. And you can see that it gets overbought, you sell it. Gets oversold, you buy it. Some people will try for the other side of the Bollinger Band. Really, I think at this point, and on a 5-minute chart or less, a scalping chart, it could be used more or less in a very quick back and forth way, but you really need a trend like that. Or, and probably the more effective way, at least on a short-term chart, is when you see these squeezes. Because notice how you could have taken just this squeeze and you could have said, okay, let's take a look at the chart here. This is an area that's been support and resistance. We got this squeeze. It breaks down. I'm aiming for that. Where do you put your stop loss? On the other side of the Bollinger Band. So on a very short-term chart like this, that's probably the easiest way to trade it. We get a squeeze here. You say, all right, fine. Put your stop loss on the other side of the band. So where could it go from here? Well, that was previous support and resistance. That's basically where we got to. You could make an argument for support and resistance there as well. So that works out. Also, let's go ahead and take a look at Ethereum. You can see nice downtrend. A lot of times when you get these downtrends like this, traders will come in and short it off of the moving averages. Well, it just depends on the slope. Again, like I said, there's a million different ways to use the Bollinger Band, and I would encourage you to certainly explore different ways. But all I'm doing is showing you the most common. This is the squeeze here. Notice how we start to pick up and take off, and it leads to a huge move. It's a very volatile move. So there's your previous resistance. We slam into that, we pull back, and once we finally break out of it, it's a huge move. It's like a $90 move. So definitely something worth paying attention to. So in the next video, I'll walk you through some examples of actually using this.